Welcome back. Google releasing a new family of open source models today that it says can run on a single chip, a GPU or Google's custom AI chip called the TPU. Deirdre Bosa has more in today's Tech Check. Dee, interesting development here.
Hey, Leslie, good morning. Yeah, this is really Google's answer to DeepSeek's breakthrough and flexing its custom chip advantage on the way. Now, this chart the company put out with the announcement, it shows that Gemma 3 can be run on a single Nvidia H100 versus the equivalent of 34 of them needed to run DeepSeek's R1 reasoning model, 16 for Meta's Llama 3. Now, this really underscores Google's efficiency edge, making advanced models more accessible and cost-effective for enterprises, an edge that is actually pretty well known to those that follow Google closely, but a fact that is often overlooked by the market. Now, the other piece of this announcement, it highlights Google's custom chip advantage and a potential growing threat to Nvidia's dominance as the AI race shifts to an inference versus a training phase. Hyperscalers, we know they are developing their own in-house AI chips to bring down costs and reduce their reliance on Nvidia. It's notable in this Gemma release that Google says its TPUs, its custom in-house chips, can achieve what GPUs can. And the worst kept secret in tech is that Anthropic widely uses Google Cloud and thus their TPUs for the majority of their inference. Amazon, too, has been making inroads for its Trainium chips through its own investment in Anthropic. This week, Meta began testing its first in-house AI chip. And of course, OpenAI has big ambitions here. It is pouring resources into developing its own as well. Startups are also gaining traction. Cerebrus's specialized AI chips, they're powering Perplexity's Sonar model and Mistral's chatbot. All of this raising questions over NVIDIA's dominance in this next phase, and questions over its margins, which is really amazing for a hardware company if other options are finding more efficiency and able to offer sort of better efficiency, lower costs. Now, NVIDIA, of course, you'll hear this often, it is an ecosystem, and Jensen Huang says its chips are just as powerful for inference as they are for training, but the economics are shifting. And even as spending from the mega caps remains elevated, Project Stargate promises hundreds of billions of dollars in data center spending. NVIDIA's share price is telling us a different story. It's certainly rebounding today, up nearly 6%, but it's down 15% on the year. Next week's GTC, guys, that will be crucial to the narrative. And, one of the number one questions on people's minds is, how they compete in this inference phase where there's a lot more competition.
Google actually just dropped a bombshell that may put Nvidia out of business for good this time. What could I possibly be talking about? I am talking about the new Google AI model that can operate efficiently using just one chip, whether it's Nvidia's powerhouse H100 or Google's very own custom TPU. While rivals like DeepSeek and Meta are wrangling with dozens of chips, Google is setting a new standard of efficiency that could change the AI landscape. So is this the end of Nvidia's AI supremacy? What happens when Google finishes working on their own chip as well? Only one way to find out. Welcome back, everyone, to Investocracy.
Google unveiling an upgrade to its Gemini-powered AI overviews, including a new feature promising to help users dig deeper into their searches. Deirdre Bosa has the latest in today's Tech Check. So how does that work, Deirdre?
Hey, Sarah, I'm going to tell you. So the latest push, it expands AI overviews to something called AI mode. The pre-AI straightforward search for something like Sleep Tracker, it brings up something like this, sponsored posts at the very top, an easy way for Google to charge for ads. The new, still experimental AI mode looks like this in Google's demo. As you can see, it anticipates questions, and so it's powered by a custom version of its Gemini reasoning model that uses a multi-step approach to give users a mix of what looks like sponsored posts, plus AI-generated answers and comparisons. It then prompts for another question, keeping the dialogue going rather than the user entering another prompt at the top for a whole new set of search results. So by getting a more detailed understanding of what the user is looking for, Google says that when it does suggest a website, a merchant, the user spends more time on it. So they say it's a better match between intent and result, which makes advertisers more willing to pay for placement, even if you don't have those typical 10 blue links. So in short, guys, this is a shift to a more AI within search. That doesn't just change how users use it, it also changes how Google monetizes. It's blending AI discovery with its core advertising business. Whether Google can do it fast enough, whether it works, that is still, of course, open questions. AI native chatbots like Perplexity, of course, they are testing their own ad models, and they don't have, these massively profitable businesses that they have to worry about disrupting like Google does, the classic innovator's dilemma. And that, of course, has really been the overhang for Google's valuation, along with regulatory pressure. But what might be underappreciated by investors, though, is Google's own AI pricing efficiency. We've talked about this. It owns the different layers of AI development, really from the infrastructure level to AI models to apps and services, not to mention its huge distribution advantage, billions of users across Google products. So that vertical integration, along with an updated ad strategy, if it can pull it off, that could be another advantage. It could make it cheaper for Google to deploy AI than, say, an OpenAI, which seems to be going in the other direction. Its latest model, many times more expensive than the other cutting-edge models out there. And Altman on X contemplating a credit-based pricing model. Guys, we're now just a few months out from Google's annual I/O event, which over the last few years has certainly become Google's most important AI showcase, one of the most important AI events of the year. AI mode, which it's showing off, could be a key test of whether Google is willing to overhaul search in a more meaningful way and able to, avoid or at least appease those that are, worried about the innovator's dilemma, certainly that it's been facing since ChatGPT came onto the scene.
Recently, Google's unveiling of the Gemma 3 has not just been a tech marvel, but also a strategic coup in the stock market. Unlike its competitors, Gemma 3's ability to run on a single chip is not just a tech statement, but a financial one. For companies constantly battling to balance budgets while leveraging advanced AI, Google's option is akin to finding a unicorn in the wilderness of tech expenses. But before going on with the video, are you into cryptocurrency? If so, check out our second channel, Investocracy Crypto. We bring you breaking news, expert analysis, and the latest trends in the fast-moving world of digital assets. Whether you're a seasoned crypto investor or just curious about the future of finance, we've got something for you. Click the link in the description to subscribe to Investocracy Crypto now. Don't miss out and stay ahead of the game. Now, let's get back to the video.
Melissa, I don't know if Deirdre covered this in her kind of recap from the call, but they did say that there are two headwinds related to FX and the loss of 1 day of leap year. It's going to have a negative impact on the March quarter. But they also said, and this was what really caught my attention, is that the cloud segment is going to have variability. That was the comment, variability quarter to quarter based on when capacity becomes available. It all makes total sense. But when you play it into investors hyper-focused on the near term, what it means for the March quarter in terms of Google Cloud growth, the street's at about 30%. When you talk about variability, it probably means that the numbers should be closer to 27%. So I just want to highlight the stock is really trading on one data point, which we need to start there and just acknowledge, of course, that this is all about Google Cloud. But I think that is largely missing the point. The search business saw a fractional acceleration in growth. They've rolled out from 300 million customers that saw AI overviews to over 1 billion. Remember, that's the big negative here is generative AI and Perplexity going to take away? We're not seeing that yet, but I think that is an impressive. YouTube, 2.5% upside. That was in part driven by some of the election spending, so don't read too much in that. But overall, I put this in general, my money's on that this is an overreaction, what we're seeing here. And then one final piece, Melissa, as Dan was kind of doing some of the setup here, talking about the derivatives relative to this, and the concept that we're shifting to a software-focused AI trade. And I understand that concept around that, but I think there is much more room left for these hardware companies to grow. Again, of course, the 47% increase in CapEx that Google talked about tonight. They got to run the table. Amazon needs to say something positive about CapEx. If they say something negative, then all bets off. But my suspicion is that they're going to also be spending like drunken sailors. And I think that this AI hardware trade still has another year or 2 years left in it.
I know those are real issues, but FX and the leap year thing really sound like lame excuses. I mean, Google's got a calendar. We know that, so they know that leap year is not. Anyway,
I agree. It's weak.
Right, it's kind of weak. Putting that aside, though, in terms of the CapEx spend, as an investor, are you confident that additional spend, there's going to be a return on that? I mean, I think that is a critical issue here. A ramp of 47%, that's major. And what are we getting out of it? Yeah,
it's major. Just some quick context to that. They generated this year $72 billion in cash. They've got $97 billion in cash. They're talking about taking their CapEx from $51 billion to $75 billion. they've got plenty of money to spend. And I understand the concept of wanting to see a return on this, but they've got the money to invest. And then, how do we see this forward? And unfortunately, I can't put a stake in the ground and say that all of this is going to have this incredible outcome. I believe it will for all the virtues around AI. But that's going to be a question that's going to be nagging. I would say that where are they spending that more specifically on the infrastructure? Sundar said that this year is going to be the most innovative year in search. Every year should be incrementally more innovative, of course. But I think that speaks to still this underlying question is the Google search results is still pretty junky. It's pretty messy. It's not as clean as Perplexity by any measure or GPT. And I think they need to really overhaul that in the next year, 2 years, while not really jeopardizing the golden goose around their search business. They still got to thread the needle here, still feel confident they can do it, but there's a big task ahead of them.
The announcement has made significant waves, with Nvidia seeing a 7% uptick today, but the year hasn't been kind as its stock is still down by 14%. This development couldn't have come at a more intriguing time. Remember when deep learning just needed more power? Now, the buzzword is efficiency. Google, Amazon, and Meta are flexing their AI muscles, each with custom chips designed to edge out Nvidia's dominance. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Gene, it's Karen. Thanks so much for being on. Just to clarify something for you, were you saying they were not capacity constrained in Q4, but would be in Q1?
What I was saying was that just there was no capacity issues there in Q1. There's just variability in saying that. I guess that is a form of capacity is that they just don't have some of the data centers up and running. So yes, I guess that is a form of, in an indirect way, saying that they're capacity constrained. She did not explicitly say that they got too much demand, but she said that based on availability of hardware, when these data centers are up and running, is going to have an impact. And that's understandable, but I don't think investors are going to really like that tomorrow. Again, I think this is an overreaction. I think the stock should be flattish on these results versus down 8%.
As the AI battleground intensifies, one thing is clear. Google's smart play with the Gemma 3 family isn't just about flexing tech might. It's a pivotal moment that investors should observe closely. And a question pops up. Can Nvidia adapt to counter this new wave of efficiency-focused tech? What is your opinion on that? Share your thoughts. Finally, if you would like to know what companies like Nvidia or Google have been up to these past few days, go ahead and click on the next video on your screen. See you there.